Hello students, welcome to BYJU'S. Welcome to a session on the analysis of the questions which are asked in the UPSC Prelims 2019, and in this particular discussion we'll take care of the questions which were asked basically on Indian economy as well as the schemes of government of India. And the questions that I've picked up, the serial numbers will be from the set C of the question paper. Let's begin the discussion. Question number 12, consider the following statements. Purchasing power parity exchange rates are calculated by comparing the price of the same basket of goods in different countries. Second statement, in terms of PPP dollar, India is the sixth largest economy in the world. Now the concept of a PPP is basically a comparison of quality of life. What do I mean by this? Let's say hypothetically, a set of goods and services are taken. How much money do I need to spend in India to purchase this particular set of goods and services? And the same set of goods and services will cost me how much? Let's say in USA. And hypothetically, if this particular set cost me 50 rupees in India and $1 in USA, as per this particular exchange rate, that is as per PPP, the exchange rate will be $1 is equal to 50 rupees. So remember this, the exchange rates are usually determined either by market forces or in the form of a PPP. On day-to-day basis, what you see in the newspaper is the exchange rate based on the market forces. That is how many dollars are coming into India, how many dollars are flowing out of India, the demand for rupees and the supply of rupees. That will determine what is the exchange rate. Whereas in case of PPP, to get the same quality of a life across various countries, how much money do you need to spend? This particular concept is called as a purchasing power parity. And based on this particular discussion, yes, the first statement is correct. That is, purchasing power parity exchange rates are calculated based on taking the price of basket of goods and services across different countries. And this particular basket of goods and services is the same across all these particular countries. First statement is correct. Now the second statement, in terms of PPP dollar, India is the sixth largest economy in the world. Please remember this, in terms of a PPP exchange rate, India is the third largest economy. Whereas in case of the market exchange rates, India is the sixth largest economy. So the statement which has been given is wrong. For a simple reason, it is a PPP dollar means India's rank will be how much? Third largest economy. So first statement is correct, second statement is wrong. Right option will be option A. Let's go to the next question. Question number 14. Among the agriculture commodities imported by India, which one of the following accounts for the highest imports in terms of value in the last 5 years? Now this is the question which has been asked solely on the information which has been provided in various newspaper articles. For a simple reason, in the last 1 year, there has been a lot of discussion with respect to the concept of import as well as the export of agriculture commodities. There has been a lot of imported agriculture commodities into the domestic market, which is harming or which is cutting off the earnings of the farmers in India. And on the other side, Government of India has also proposed a framework or a unified framework to promote agriculture exports from India. So based on this particular discussion which has been happening in the last 1 year, this particular question has been asked. So out of these particular commodities which have been listed here, India imports spices, India imports pulses, and India imports vegetable oils. But historically, the import of vegetable oils has been the highest. And even in the last 5 years, the import of vegetable oils has been the highest amongst the commodities which have been given here. So the right option for this particular question will be option D, that is vegetable oils. Question number 16. Which one of the following is not the most likely measure the government or RBI is likely to take to control the slide of Indian rupee? Now, what do you mean by slide of Indian rupee? Basically, they are referring to depreciation of rupee. Now, the question basically says, government as well as RBI are taking various reforms to control the depreciation of rupee. Which one of these particular policies is not the most likely measure which has been taken to control depreciation? Let's look at the options here. curbing imports of non-essential goods and promoting exports. Now, Government of India might impose certain restrictions on imports of certain commodities into the domestic market. Now, these particular imports are basically essential imports or non-essential imports. A best example of essential import will be crude oil, whereas non-essential import, the best example in this particular context will be gold. In the last couple of years, Government of India has tried to restrict the importing of the non-essential commodities so that these particular imports come down, as a result of which outflow of dollars will also come down. And since the outflow of dollars is going to come down, the impact of that it has on the depreciating rupee will also be controlled. Have you understand this? The basic logical explanation is, if I import it, I will have to sell rupees and buy dollars and repay in dollars. So when I sell rupees, the supply of rupee increases, and when the supply of rupee increases, this particular currency will start depreciating in the forex market. So if I put certain lid or certain conditions with respect to importing of non-essential commodities into the domestic market, will it help in controlling the depreciation of rupee? Definitely yes. Second, encouraging Indian borrowers to issue rupee denominated masala bonds. These particular masala bonds are nothing but offshore instruments. That is, an Indian company will go to the foreign market, will issue these particular securities and collect money. But more importantly, the money that they have collected is in the form of rupee, not dollar. Usually, under the concept of external commercial borrowings, the Indian entities will borrow in the form of dollars. Whereas in case of masala bonds, the Indian companies will borrow in the form of rupees. Since the flow is in the form of rupees, is it going to affect the exchange rate of rupee? Not so much. More importantly, it will help RBI as well as Government of India in controlling the slide of Indian rupee. So even this is a measure which can be taken. Third, easing conditions relating to external commercial borrowing. Already I have mentioned the concept of ECB, that is an Indian company going to the foreign market, borrowing from this particular foreign market. This is a concept of an external commercial borrowing. And whenever the external commercial borrowings are done, we are going to infuse dollars into the domestic market. And when the dollars are infused into the domestic market, there is a demand for rupees. And when there is a demand for rupees, rupee will start appreciating rather than depreciating. So look at this. Even C is a point which is taken by Government of India or RBI to control the slide of Indian rupee or to control the depreciation of Indian rupee. Point A can be taken. Point B, yes. Point C, yes. So left out is what? Point D. That is following an expansionary monetary policy. Always remember this. The concept of a contraction or expansion of monetary policy is more associated, or the primary target of this kind of a monetary policy is either controlling inflation or promoting growth. Whenever there is an expansionary monetary policy, it is done to promote growth. And whenever there is a contractionary monetary policy, it is done so as to control the inflationary trend in the market. So the main objective of this particular monetary policy is related to growth, not related to slide of Indian rupee. So point D is the right option for this particular question. So this is the answer. Question number 17. Consider the following statements. Reserve Bank of India's recent directives relating to storage of payment systems data, popularly known as the data diktat, command the payment system providers that. This is basically a concept of data localization. That is, RBI has asked some of the companies such as Visa, Mastro to store the financial related information of Indian users only within India. That is, they are supposed to store this information only in India. They are not allowed to take this particular information outside India. This is the point which they are referring to here. So based on this, what points have been given here? They shall ensure that entire data relating to payment systems operated by them are stored in systems only in India. Yes, that is the whole objective of this particular guideline. Second, they shall ensure that the systems are owned and operated by public sector enterprises? No, this is not a point given in this particular guideline. Third, they shall submit the consolidated system audit report. This is referred as SAR, System Audit Report, to the Comptroller and Auditor General of India by the end of calendar year. This announcement was done last year itself, that is in the year 2018, and RBI basically stated that the System Audit Report, that is SAR, has to be conducted and has to be submitted to itself. That is, the report has to be submitted to RBI itself. Whereas the point basically refers to the Comptroller and Auditor General. Hence, even the third point is wrong. So, based on this particular elimination method, the right option is option A, first statement only. Question number 20. The money multiplier in an economy increases with which one of the following? Before looking at the options, what is the concept of a money multiplier? I'll give a very simple example. Let's assume RBI prints a currency note of denomination 100 rupees and that particular 100 rupees comes to me. I'm receiving this particular 100 rupees. Now what will happen? Understand this. In case of India, we follow a concept called as fractional reserve banking system. Fractional reserve banking system. Under this, let's say hypothetically, I'll take this 100 rupees, go to a bank, keep this full 100 rupees in the form of a fixed deposit. Now, once I've kept a fixed deposit, the bank will maintain certain reserve, which we'll call it as reserve ratio. And let's say hypothetically for this particular explanation, the reserve ratio is 10%. What is the meaning of this? Out of 100 rupees deposit which has been collected by the bank, it will keep us at 10 rupees and remaining 90 rupees, it will issue it in the form of a loan in the market. Obviously, the function of a bank is what? Collection of a deposit, issuing of loans and advances. Now, since it has collected 100 rupees from me, it will make sure that it will maintain the reserve ratio, and of the remaining amount, it will basically issue loans and advances. Now, let's say hypothetically, you're a businessman. You have been issued a loan of this 90 rupees. Now, what you will do after you take a loan of 90 rupees? You will go to the market. Let's say you will purchase raw materials. There's a supplier. You will purchase the raw materials from this particular person. Once you purchase the raw materials, what you will do? You will make the payment. And let's say hypothetically, you transfer the amount from one account to another account of a bank. So what happens here? This 90 rupees, which were given to you in the form of a loan, you have paid it to the raw material supplier. And since you have transferred from one account to another account, basically this 90 rupees again enters into the banking system only. And now the bank will do what? Out of this 90 rupees, it will keep aside 9 rupees, which is nothing but the reserve, and remaining 81 rupees, it will again give it in the form of a loan. This concept is nothing but a concept of a fractional reserve banking, which will lead to credit generation or issue of credit in the market. Now look at this. This can be done multiple times, but within 2 steps itself, the same 100 rupees has become 190 rupees. I can understand this. RBI initially had issued only 100 rupees. But this particular process of fractional reserve banking system is used for creation of a credit in the system. And by how much credit will be created, this feature is called as money multiplier feature. I can understand this. With this 100 rupees itself, how much money can be created in the banking sector? This feature is called as a money multiplier. For example, let's say hypothetically, out of all the steps that are taken here, that is, the deposit is entering the bank and the bank is keeping the reserve and again issuing the amount in the form of the loans. Again, this will enter into banking sector. Again, reserve will be maintained. Again, loan is issued. Let's say hypothetically, a total of 1000 rupees has been issued like this. Initially, the amount which was issued or printed and issued by RBI was how much? 100 rupees. But finally, how much money has been created? 1000 rupees. Then the money multiplier will be 1000 divided by 100. That will be 10 times. Or we'll simply say money multiplier is 10. So this particular feature is called as a money multiplier feature. Now based on this, let's look at the options here. The money multiplier in an economy increases with which one of the following? Increase in the cash reserve ratio? No, this will not lead to increase in the money multiplier. Increase in the banking habit of the population? Definitely yes. Let me give an example. Let's say in a village there are 100 people. Out of 100 people, earlier only 70 people were under the banking sector. Now, is it okay if I say that 30 more people get covered under the banking sector, as a result of which deposits collected by the banks will increase? And when the deposits collected by the banks will increase, it will lead to a credit creation or credit generation in the system, which is nothing but effectively a money multiplier itself. Or else you can simply say the same 70 people who are already covered have started depositing more and more in the banking sector. And since they're depositing more money, deposit collection or deposit mobilization of the bank increases, and with increased deposits, money multiplier will take place. So option B is the right option. Question number 22. What was the purpose of Inter-Creditor Agreement signed by Indian banks and financial institutions recently? This question is basically on the concept called as Project Sashakt. This particular project was announced to take care of the stressed assets in the banking sector. Now, within this particular Project Sashakt, there were 5 measures or 5 steps which were referred to take care of these particular stressed assets. We'll focus on the first 2 steps only, because by that information we'll be able to solve this particular question. The first step was basically if the loan is having a value of up to 50 crore rupees. If the stress asset is up to 50 crore rupees, then in this case, the individual bank will try to resolve this particular issue. What if the loan value is more than 50 crore rupees and up to 500 crore rupees? Then there was a concept of Inter-Creditor Agreement. Because to resolve this particular stress asset, Project Sashakt recommended lead bank approach. Now, what is this particular lead bank approach? Let me give an example. Let's assume there is borrower B. He has taken a loan of 400 crore rupees, of which 3 banks have given loans X, Y and Z. X has given a loan of 300 crore rupees, Y has given a loan of 40 crore rupees and Z has given a loan of 60 crore rupees. And whenever these kind of lenders come together to issue a loan, this is called as a consortium lending. And in case of a consortium lending, the bank which has given the highest amount of a loan will be referred as a lead bank. And under Project Sashakt, the lead bank will enter into an agreement with the remaining banks in the consortium. This particular agreement is called as Inter-Creditor Agreement. Now, based on this, the question has been asked. What was the purpose of Inter-Creditor Agreement? Point A, to lessen the government of India's perennial burden of fiscal deficit. No, wrong. To support infrastructure projects of central and state governments. Wrong. To act as an independent regulator in case of applications for loans of rupees 5 crore or more. Wrong. To aim at a faster resolution of stressed assets of rupees 50 crore or more which are under the consortium lending. Right. So question number 22, the right option will be option D. Question number 23, the chairman of public sector banks are selected by. I am underlining the term selected by, because please understand 2 terms that you need to understand very carefully is selection, appointment. Appointment of chairman to public sector banks is done by Government of India. Whereas the selection is done by Bank Board Bureau. And the question is based on the selection. Right option for question number 23 will be Bank Board Bureau or BBB. This particular Bank Board Bureau was one of the very important reform measure that was announced by Government of India under a policy called as Indradhanush. Indradhanush was a set of 7 reforms in the banking sector. Do not get confused between Indradhanush of healthcare sector with Indradhanush of banking sector. So under Indradhanush, 7 set of reforms were announced, One of the very important reform was Bank Board Bureau. Bank Board Bureau is responsible for giving a recommendation to Government of India with respect to appointment of chairman of public sector banks. So the right option for question number 23 will be option A, Bank Board Bureau. Question number 24. Consider the following statements. Petroleum and Natural Gas Regulatory Board PNGRB is the first regulatory body set up by the Government of India. Now this particular regulatory body was set up in the year 2006. Now don't you think before 2006 Government of India would have set up many more regulatory bodies? So basically the first point will be wrong. Second point, one of the tasks of PNGRB is to ensure competitive markets for gas. Now since it is a regulatory board, obviously its role will be what? To ensure the market or competitive market for gas. So second point is true. Third point, appeals against the decisions of PNGRB go before the appellate tribunals of electricity. Electricity Act of 2003 led to setting up of appellate tribunal for electricity. And under this particular act, it was also allowed to hear the appeals against the decisions of PNGRB. Or in simple terms, this particular statement is true. Appeals against the decisions of PNGRB can go before the appellate tribunal for electricity. So point 2 and point 3 are correct. Based on this, the right option will be option B, 2 and 3 only. Question number 26. Which of the following statements is or are correct regarding Maternity Benefit Amendment Act 2017? First point, pregnant women are entitled for 3 months pre-delivery and 3 months post-delivery paid leave. Now, if you know anything related to this particular concept of a Maternity Benefit Act, under this, most important point is increase in the paid leave for the pregnant women from 12 weeks, which was given earlier, to 26 weeks. Even if you know this particular point, you can solve this particular point. How so? Look at this. On totality, the total amount of a paid leave given to women is how much? 26 week year. And the point basically says 3 months pre-delivery and 3 months post-delivery. It is basically speaking of how much? 6 months. And how much is allowed here? 6.5 months. So the first point on the face of it itself is wrong. Even if you don't know how much is allowed pre-delivery and post-delivery, doesn't matter, you can solve this particular point. Second point, enterprises with creches must allow the mothers minimum 6 creche visits daily. Allowed under this particular act is 4 creche visits. Point says 6 creche visits, this is also wrong. Third point, women with 2 children get reduced entitlements. This point is true because as per this particular act, once a woman is expecting a third child, then the entitlement will fall down from 26 weeks to 12 weeks. So this particular point or statement is correct. Based on this, the right option will be option C, 3 only. Question number 27. Which one of the following is not a sub-index of a World Bank's Ease of Doing Business Index? In the last year, there was a lot of discussion with respect to this particular concept of Ease of Doing Business Index. This is published annually by World Bank, wherein they evaluate the performance of every country which are under consideration based on 10 parameters. What are these particular 10 parameters? The list is given here. Now, even if you don't know the list, let's look at the points given here. And remember this is related to what? Ease of Doing Business Index. First, maintenance of law and order. Do you think there is any direct correlation between maintenance of law and order with Ease of Doing Business Index? If you think logically, there is no correlation between these two parameters or between these two statements, that is Ease of Doing Business Index and maintenance of law and order. This is more of a social issue, not related to a business. Apart from this, B is present in the list, C is there, D is there. So B, C, D are there, A is not there. So the right option will be option A. So question number 27, right option is option A, maintenance of law and order. Question number 29, the economic cost of food grains to the Food Corporation of India is the minimum support price and the bonus, if any, paid to the farmers plus. What it basically is asking you is the concept of economic cost of food grains. Under this, he has given a statement that is MSP plus bonus, if any, and plus dash. You will have to find out what is the missing part here. But before that, what is this MSP, what is this bonus, and what is this economic cost of food grains? MSP is the price which is guaranteed by Government of India, which they are going to pay to the farmer or cultivator when they procure the food grains from him. I'll repeat the statement. It is the guaranteed price which the government pays to the farmer after procuring the food grains from him. That is the concept of MSP. Second, central government announces MSP, state government announces bonus. For example, let's say a commodity X, central government announces MSP of 1000 rupees, state government of the same commodity announces bonus of 200. Then this particular farmer, when he sells this particular commodity X, he will get 1000 rupees plus 200 rupees. This is a basic concept of MSP and bonus. Now, what is this concept of economic cost of food grains? Let's assume I am FCI, Food Corporation of India. And Food Corporation of India needs to ensure there is a supply of food grains for public distribution system. For example, National Food Security Act. Now, since FCI needs to ensure that rice and wheat coarse grains are available under the NFSA, it will procure the food grains. And let's say hypothetically I go to a farmer and procure the food grains from him. While procuring, what will I pay him? I will pay him MSP. And if there is any bonus, it will be paid to him. But after this, look at this. Once I procure, I will incur MSP. I will bring it to the godown, which will again incur the warehousing cost or godown charges. After this, I will incur transportation cost. And once it reaches the shop where the food grains are distributed, I will also incur the distribution cost. So the first two are usually called as procurement incidentals. And this is called as distribution cost related expenditure. Now, all of this put together, we will call this as economic cost of food grains. Based on this, the question has been asked. So the economic cost of food grains to the Food Corporation of India is the minimum support price and bonus, if any, paid to the farmers plus. What is missing? Missing is this particular component. Let's look at the points given here. Transportation cost only, not only. Interest cost only, wrong. Procurement incidentals and distribution cost. This is the right option. Procurement incidentals and charges for godowns. This is part of procurement incidentals itself. So the right option will be option C for question number 29. Question number 31. The service area approach was implemented under the purview of. Under the concept of a banking, in 1969, we introduced a concept of a lead bank scheme. Now, what do you understand by the concept of a lead bank? In a particular area, there will be multiple banks, let's say A, B, C, D. But of these four banks, if A had acquired the majority of the market in this particular area, A will be referred to as a lead bank. And this particular lead bank has to ensure that certain services will be provided to the population which is present in this area. The scheme which was implemented to ensure this was called as lead bank scheme. And under the concept of a lead bank scheme, we had a concept called as service area approach. It basically refers to the area where this particular bank A is going to provide its services. So the right option for question number 31 is option B, lead bank scheme. Question number 33, consider the following statements. Most of India's external debt is owned by government entities. Now, government will have a certain debt which could be internal as well as external. But apart from this, even the private sector will have the debt which is again internal as well as external. All of this put together is the total debt of India. Now the analysis will basically show you that out of this particular total debt which is owed to the foreign market or external market, majority or the substantial part or the highest share of this particular debt is on the heads of the private sector. Or in simple terms, private sector owes the highest debt to the foreign market out of all the entities which have borrowed in India from the foreign market. So basically the first statement is wrong. It is not the government entities, it is rather private sector which has most of India's external debt. Second statement, all of India's external debt is denominated in US dollars. No, the debt is denominated in dollar. It could be rupee denominated debt. It could be any other foreign currency denominated debt. So even the second statement is wrong. Based on this, the right option will be option D, neither one nor two. Question number 34. Which of the following is not included in the assets of a commercial bank in India? Now, generally a bank on one side will collect deposits and on the other side will issue loans and advances. These particular deposits which the bank has collected become the liability of a bank, whereas the loans and advances which issued by this particular bank are the assets of this particular bank. Let me explain it to you. If I am a bank and you come to me, keep a deposit, fixed deposit worth 100 rupees. Now don't you think after 1 year, I owe you this particular amount, principal of 100 rupees as well as the interest. So the deposits which are collected by this particular bank become the liability for this particular bank. So these are the liabilities. Whereas if I am a bank and I give you a loan, you will have to repay me the principal as well as the interest. So on these particular loans and advances, the bank earns interest. In simple terms, bank pays on these deposits, banks earn on these particular loans and advances. So based on this, let's solve this particular question. Which of the following is not included in the assets of a commercial bank of India? Advances, is it an asset? Definitely yes. Deposits, is it an asset? No. There itself can stop, or else let's go ahead. Investments, yes, these are assets. Money at call and short notice, yes, these are also assets. So the option or the correct option for question number 34 will be option B, deposits. Question number 35. In the context of India, which of the following factors is or are contributors to reducing the risk of currency crisis? Before looking at the points, currency crisis is basically nothing but whenever there is a sudden depreciation in the domestic currency. Remember this? Whenever there is a sudden depreciation, usually experts take it at around 15% of the value. If the domestic currency depreciates quickly by 15% of its value, we'll basically say this particular currency is in crisis. So basically the question is asking you which one of these particular points will help in reducing the currency crisis. Let's look at the points here. The foreign currency earnings of India's IT sector. It's a basic concept, understand this. If IT sector sells its services to the foreign market, we will receive the payment in dollars. And when the payment is in dollars, we will sell dollars in the market and purchase rupees. So supply of dollars has increased. Demand for rupees has increased. As a result of this, rupee will appreciate. So basically, it will help in reducing the risk of currency crisis. Second, increasing the government expenditure. This doesn't help in reducing the risk of a currency crisis. Third, remittances from Indians abroad. Again, the same logic. Dollars will flow into India, and when these particular dollars are exchanged, the demand for rupees increases, rupee will appreciate. So even point 3 will help in reducing the risk of currency crisis. So point 1, point 3 are correct. Right option for question number 35 will be option B, 1 and 3 only. Next, question number 37. Which of the following is issued by the registered foreign portfolio investors to overseas investors who want to be part of the Indian stock market without registering themselves directly? This is a basic concept of a participatory notes. In case of participatory note, what happens? Let's assume here is a foreign investor. He wishes to invest in Indian stock market. But before investing in the Indian stock market, he has to come under the KYC guidelines. For whatever reasons, he doesn't want to come under KYC norms. So what he will do? He will approach a foreign institutional investor, such as a hedge fund manager or investment banker, so on and so forth. Once he approaches them, he will provide the money to them to be invested in the Indian stock market. And in return, this particular FII will issue a certificate or a security of a sort. This particular certificate is nothing but a promissory note. So the right option for question number 37 will be option D, participatory note. Question number 40. With reference to India's 5-year plans, which of the following statements is or are correct? Let's start. From the second 5-year plan, there was a determined thrust towards a substitution of basic and capital goods industries. Even if you have read or have a cursor reading of the second 5-year plan, which is also referred as Maternis strategy, you will know that from the second 5-year plan, we actually started promoting capital industries in India. This point is basically going exactly opposite to what is the truth. So point 1 is wrong. Fourth 5-year plan adopted the objective of correcting the earlier trend of increased concentration of wealth and economic power. Yes, it's true. Third point, in the fifth 5-year plan, for the first time, the financial sector was included as an integral part of the plan. No, this is wrong. So only second statement is correct. Right option will be option B. Question number 50. Consider the following statements. As per the Industrial Employment Standing Orders Central Amendment Rules 2018, if rules for a fixed term employment are implemented, it becomes easier for the firms or companies to lay off the workers. What is the concept of a fixed term employment? In this particular case of fixed term employment, for what period or tenure the employee will be hired will be in the agreement. The tenure, the payment, the kind of work, everything is put in the agreement. Such an agreement is basically referred as a fixed term employment. If I am an employer and I have hired a person X, and while hiring him, I have told him after 1 year, I will no more need your services. That is, I have hired him under the concept of fixed term employment. Does it not make easy for me to lay him off after 1 year? Definitely yes. Point 1 is correct. No notice of termination of employment shall be necessary in the case of temporary workman. Yes, by nature it is what kind of work? Temporary work. Even the second statement is true. So, based on this, answer for question number 50 will be option C, both 1 and 2. Next, question number 74. In a given year, in India, official poverty lines are higher in some states than in other states. Because, now please understand, poverty line is nothing but it is the minimum expenditure that is required on day-to-day basis. Why it is required? So that the population can be differentiated into below poverty line and above poverty line. Let me give an example. If the poverty line is 32 rupees, anybody who spends less than 32 rupees a day or is unable to spend 32 rupees a day will be classified as below poverty line. Anybody who spends above this will be classified as above poverty line. This is the concept of a poverty line. And this particular concept of a poverty line will vary from one state to another state for a simple reason. The price levels in each of the states will vary. And when the prices of these particular goods will vary or commodities will vary from one state to another state, the poverty line should also vary. That is a basic argument here. So based on this discussion, poverty lines will vary from one state to another state. For a simple reason, the price levels will vary from one state to another state. So the right option will be option B. Question number 89. Atal Innovation Mission is set up under the AIM, that is Atal Innovation Mission, has been set up under Niti Aayog. The main objective of Atal Innovation Mission is to promote entrepreneurial culture in India. So the right option will be option C, Niti Aayog. So these are the various questions related to Indian economy as well as the schemes of Government of India based on which the questions have been asked in UPSC Prelims 2019. Thank you. Have a good day.